The only place success comes before work is in the dictionary. Vince Lombardi. Every day we work toward success. How do we do that? 10 to 15 minutes every day covering these markets. We cover the S&P 500, a big basket of 500 stocks, the Nasdaq 100, the tech stocks, 20-year U.S. Treasury bonds, and gold. A nice broad array. You can use the lessons that you glean here every day, 10 to 15 minutes, with any stock you're interested in practice trading and learning about. Again, stay with us, take all the trainings, and in fact, we have a great training for all the subscribers at chartingwealth.com. It'll be in your show notes. Very proud of this one, very proud of it. Secrets of Profit and Loss Bands. You know what profit and loss bands are? If you don't, you need to. They will help you not lose your ass and at the same time be able to hit, hopefully, your profit goals in your practice trades, or at least see where they are and how the charts are doing in relationship to hitting those goals. So please go sign up, take that training. You will get a great deal out of it. If you're already a subscriber, look in your show notes today. I want you to have that. Very, very important cutting edge training just for you. Let's jump into the charts. The S&P 500, in fact, everything up for the day. The S&P 500 up the least. 0.07%, but look at the new candle. Nice big green up candle. Now remember, Heikin-Ashi candlesticks show average pace, and we see the average pace hit a high of 312.28, and that is higher than the prior high, starting the week off nicely. We see the price percent oscillator heading up, derivative oscillator gaining upward momentum, go from the weekly to the 2-day. And that 2-day, we see it hitting a higher high. Now, this is just the first day of the latest 2-day candle. It'll finish drawing on Tuesday. Prices above the 2-day trend line, well above the weekly. Derivative oscillator peaked, back on the 2-day candle ending Thursday, the 7th of November. And it's been heading down since then. So again, main thing we pay attention to is the price percent oscillator. It's still going up. We look at the 4-hour chart, and of course, we saw things cross over. It looks like probably occurred on, it was trying to cross over Friday afternoon, more likely on Monday morning, headed on up Monday afternoon on that 4-hour chart, hitting a higher high, derivative oscillator, heading up, price percent oscillator heading up. Also, we go from the S&P 500, which we'll continue to keep an eye on. And remember, we're going into our 3rd week of price movement, moving up since the weekly vertical crossover back on the week ending the 1st of November. Jumping in point somewhere around that last at 304, and of course has hit a high going into the 3rd week, first day of the 3rd week, so 11th day, actually 10th day because we had a holiday in there, hitting a high of 312.28. 312.28 from 306, or rather 304, something like that, 304, 304.24. Not bad, is it, friends? In just 10 days. Not bad at all. That's the magic of the weekly vertical crossover. I want you to practice trade that again and again and again. Get a feel for it. It works time in and time out. There are times when it doesn't. That's why we set up our loss bands, so that when we hit that, we see it, we pull out, we take our minimum loss, and we wait to make maximum gains. You got to practice that. I want you to practice trade that again and again and again until you get a feel for it. It does take practice. Perfect practice makes perfect. Now, the Qs up a little bit more than the S&P 500, up 0.08%, reaching a higher high above the 2-day and the weekly. Price percent oscillator gaining momentum. Going up, derivative oscillator rather, gaining momentum. We go to the 2-day chart. We see the price percent oscillator continuing to climb, derivative oscillator losing momentum. First day of the latest 2-day candle above the 2-day trend line and the weekly, continuing to head up. Go to that 4-hour chart. We can see a bit of a slowing in the morning, but more up movement in the afternoon. Hasn't crossed over yet. Derivative oscillator went positive in the afternoon, but not the price percent oscillator. Again, going into the 4th week of up movement, jumping in point somewhere near the close of the market on Friday, the 25th of October at around 194, something like that, with a high of 203.39. Not bad, is it, friends? And again, maybe there's more left. Okay, we're going to leave stocks, go to bonds. Bonds up for the day, 0.18%. The gains just keep climbing. Bonds up 0.18%, still in a confirmed down move. Derivative oscillator losing downward momentum. Price percent oscillator still heading down. We see that we're forming, however, a green open box candle is the first day of a 5-day candle. That's subject to an extreme amount of change. It's 1 day of 5, so we'll continue to watch. We can see price bumping through both the 2-day and the weekly trend line, so that's significant to pay attention to, but the price percent oscillator still heading down, so the overall mood still down. 2-day chart going into the second 2-day candle, first day, so 3 days of up movement, pushed through on that last candle ending the 15th of November, pushed through the 2-day trend line, now bumping up on the weekly trend line. Derivative oscillator still barely negative, price percent oscillator heading up but hasn't crossed, so again, mood still down, but there is some change that's happening. 4-hour chart, we can see where it had slid sideways for a day in the morning on Friday, and then up in the morning, sort of sideways in the afternoon on Monday, touching that weekly trend line. So we'll continue to keep an eye on things, see what bonds are doing, how they're shaking out. If we do see things rotate over strong on that 4-hour chart going down, crossing over, remember the 2-day and the weekly are still primed for down movement. So keep that in mind as a potential practice trade for the week. Now we go to gold. We see a green solid candle forming with a wick on the bottom. Doesn't appear to be a wick on the top. Remember, solid candles, again, that's a slowing of down movement. Price percent oscillator still moving down. Derivative oscillator gaining downward momentum. Price is bumped above the 2-day but below the weekly. We go from the weekly to the 2-day, first day of the latest 2-day candle, and we see a green up candle forming. Not a big, powerful candle, but it's still a green open box candle. Derivative oscillator still negative. Price percent oscillator losing downward momentum, but still negative. So almost flat, but still the overall mood in the weekly and the 2-day is down. We have to wait and see both the 2-day and the weekly crossover going up before we have any up moves we're going to pay serious attention to. 4-hour chart bumping up. Let's see, the 4-hour chart hit a high back on the afternoon of Thursday at 138.94, 138.81, so it's not gotten as high as it did back on Thursday. So we'll watch, see what there is to see. Again, like the 20-year bonds, if we see gold roll over strong on that 4-hour chart going down, might be something for you to pay attention to jump into a down move, since the 2-day and the weekly are still in confirmed down moves. That 4-hour chart is pulling back, but if it does cross over, might give you a jumping in point for a practice trade. Folks, that's where we are as we end the day. Hope that you are signed up or will sign up and get that special training that we have for you on the secrets of profit and loss bands to supercharge your trading. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.